Hey everybody, it was John with Prime Homes bringing your monthly newsletter. I know we took a month off here in December and bring it back in January. Just finish the year strong. Hope everybody had a great Christmas and New Year's season and are ready for 2017 and make it the best year yet. Now, one thing you notice differently, we have kind of rebranded ourselves a little bit and dropped off the solutions, and we have just are now just Prime Homes. So we've changed our website to just primehomes.com. You can check us out there to see our new website and the things that we are doing. But we'll go ahead and get into the market update. Now, one thing we're going to probably start doing is changing up the date that these are released, because right now you're getting at this end of January, but I make these presentations at the beginning of the month. So I want to switch them up to where people that follow our newsletter get the freshest update the first of the month when I make these things. So probably next month you're probably going to be getting it here in the first week or two of February. But we'll go ahead and get into this. The November numbers, average sales price was 238,000, which is 9.11% increase year over year. Median sales price 186, which is a 6.7 increase year over year. Total sales 2,115, which was a 22.8% increase year over year, which to us was a little out of normal, but I mean, it's just kind of going with the continued trends that prices are increasing. Average rental price was 1370, which is 3.2% increase. Employment for November numbers was just over a million, which was a 2.12% increase year over year. So San Antonio as a whole is still continuing to gain jobs. Unemployment November numbers was a 3.5%, which is down 1.7% from the previous month. So our unemployment rate is dropping here in San Antonio. Months of inventory was at a 3.32, which dropped. I think the previous month is 4.22, which and for December numbers, which is a little off, it's not November. That number I can get December. Uh, has trickled down, but we always see a spike here in December, which you'll see here in a few slides, which is exactly what I'm talking about here. Is like you see November, I mean, your median sales prices, we've entered still in this 5-year high, and we're doing just like we have done every year. We trickle down in January, and then next month you'll probably see a jump for December sales prices, which happens pretty much every year, that it jumps before December, drops off in January, and climbs through the summer. Here it is on monthly rents as well, that we've kind of planed out during the colder months. Now this next month we will either see, I mean, if you look at, I'd expect it to either see it jump a little bit or just keep planing out before it starts climbing again. Now these are things we continue to look at and follow each year to see what the market's done. So like I've said, pretty much every market update, everything I've always heard, it's 3 to 5 up, 1 to 3 down as far as market cycles. And we have been on a 5-year high. So let's see. So coming into this summer, especially everything that's going on in the political realm and the economics, it's going to be interesting to see what happens, to see if we continue to climb or not. But I do read a lot of articles that tell us that Texas as a whole is continuing to grow, and we do have, I think it was like 1,200 people moving here a day across the state, and they're saying Austin and San Antonio are the next two to really be poised for a lot of growth. So we'll continue to watch those and bring those updates every month. Now here's a 20-year unemployment. Now you got to remember this number is reversed. As the higher the chart gets, that is bad for the economy. But I mean, if you look at it from an investor standpoint, that is when a lot of business gets done in the big investors is during those high unemployment years, because that's mean there's a lot of distress and homes are needing to move a lot quicker and they're not moving retail. But what I look at here is how long we stay down here on the bottom and bounce around before we see a climb, which you can see happened here, and not as much here before the dot-com bubble, but it bounced around at the bottom for a significant amount of time before it shot up, came down, bounced around before a real estate bubble came, and now it's down, dropped again, and now we're just kind of bouncing around this bottom part. So we'll continue to watch those numbers as those stats become available. Now, foreclosures did get a little more information as far as this goes. Posted in January, we had 432, which is a 20% decrease from the previous month. Sold in January was 152, which is a 2% increase from the previous month. This is the data that we said we've been trying to work in getting for a long time, was the foreclosure numbers posted back from all the way back to 2006. And the things that I'm really looking at here is to see, is there an early indicator as far as market turning? And if we have an idea of how we can kind of see the foreclosure numbers start rising before we start seeing distress in the news lines and news headlines and things like that. And you can see about October, May of 2007, those numbers did start to climb, and everybody started getting worried come November, December of 2007. So there is an early indicator there that those numbers start to climb, but then you see it take huge spikes, almost all the way up to 2,800, which now we are down to, I think, like between, like, what are we at here, 500 a month. So during the bad times and the recessions, those numbers do significantly increase. So those things we're going to keep watching every month to see if those numbers start to climb like they did back in early 2007, right before the real estate bubble. Now I have the posted as well now, or sold per month. And now you can see you have a huge spike, or you start to see much larger spikes during economic downturns, because that's when a lot of your big investors, I think it's Blackstone's the name of that big, one of the big investment companies, as they start picking up a lot of homes in these downturns and really increasing their inventories, and then they start selling them off about this time in the higher retail moving markets. So it's to be expected. So those things we're going to continue to watch to see how those numbers continue to perform. Now, the biggest question I always get is, where do you market at? What do we look at in the city? Where's lowest month of inventory? Now, one thing you have to remember from the investment standpoint, we look at more months of inventory instead of days on market, which is the typical retail terminology use. Now, this data is something that I couldn't find consistent, and I pull it every month and compile it by myself. So what it is, it's speed of which inventory is being consumed. So if no other houses were to be listed on the MLS, how long would it take to run through the current inventory on the market? And the balanced market, they say, is about 6 months. But San Antonio, like I said earlier, we were at 3.32. So we were much lower than the average, or where they say a balanced market is. So we are still in a very strong seller's market. But now how I calculate that stuff is I look at every property that was sold in the previous month, and then look at how many properties are still active on the first of that month. That tells me how many months of inventory you're on. And now months of inventory are important because that tells you, especially if you're getting a hard money loan, how long am I on an average going to have to hold this property? How much inventory is on there? To how many months am I going to have to maintain those interest payments on those loans while I'm waiting for this property to sell? I break it down in two different ways. I do it by price range and then by zip code. So typically I do it by 50,000s all the way up to 400,000. Then I modify a little bit just for San Antonio. Our bulk of our inventory moves, and definitely in the sub 400s, and it's really underneath the 250 and below. But here you can see where your months of inventory are, and I can see that San Antonio, we really have a shelf. Once you get over 250,000, those numbers really start climbing. I mean, really over about 200, those numbers start to climb on months of inventory. So that's numbers I look at to see how long am I going to have to hold this property and can maintain those hard money interest payments. So especially if you're getting houses that are under 200,000, you have, or between 100 and 200,000, you have very low months of inventory on the city, and that's still where the affordable housing is moving in San Antonio, since we still are such a blue collar style workforce city. Now the best zip codes that I look at here for your reference, and it's no surprise that pretty much every single one of them is below that 250,000, and only two of them are above the 200,000 mark, which is 78249, which is out by UTSA 1604 and I-10 on the northwest side, and then 78232, and I'm not really familiar where that is, but you do have a low months of inventory, but you do have a high sales price. But and so those are the things I look at. So if you have stuff in this zip code, you know that you have a very low months of inventory in those zip codes, and you're still in those sub $250,000, $200,000 price range where things really start to move. Now, worst zip codes, same deal. This is where it's the 10 most highest months of inventory on the city, and it's no surprise that a lot of these, except for one, are over 200,000, and the majority of them over the 250, 300,000 price ranges. This one here, the 78227, this is somebody, we had a discussion about that, of why that's so low, because based on the data that we poll, and the 107, that's one of the lowest in the city. But where this is at is out by Lackland Air Force Base. And it's been kind of riddled with foundation problems, foreclosures, short sales, and inventory going up that can't qualify for any type of financing. So the only people that are picking them up are investors, and they might just be holding them for rentals because it is by the Air Force Base. But values are getting beaten up pretty bad over in that section. So these are things that I look at, and when I'm looking at a property and debating of it, picking up and keeping it as one of our rentals for what we do with Prime Homes now. But that's pretty much it. If you guys would like a PDF of this, shoot me an email at john@primehomes. I have a little typo there. It's supposed to be homes, not just home. Um, and I can send you guys a PDF copy of these if you guys would like the months of inventory and stuff like that. And now if you have any questions, comments, have suggestions, some stuff you guys would like to see, please shoot me an email, and I can be more than happy to answer any questions. To go ahead and like us on Facebook to see some of the stuff we send out. But anyways, like I said, we are going to be moving our newsletter to probably by the second week of the month, so you guys can have the freshest data and stuff that we really look at. So happy investing, and we'll see you guys next month.